Welcome in. A very special episode today. They are all pretty special, but this is week number 250, and I have a big announcement to make. This will be the final week of Money Mail before episode 251. Gotcha. I didn't get you. You know, we got fucking work to do around here. We got some serious work to do. But shit, it is good to get 250 up, 250 weeks back to back. Drake going back to back. Is Drake's career finished? I don't know. Anyway, there's a lot to get through today. So I'm just going to start with some quick fire stuff. If you haven't listened to the episode that I recorded with Simon from Fitwear, it's just come out, and I would strongly suggest that, I know it's one of those episodes where you look at it and go, holy shit, it's an hour 43. I find Simon fascinating. We get on really well. We don't get to catch up often. So it's kind of a blend between us having a yarn as if we haven't spoken for a bit, which we haven't, and then also me trying to pull some lessons out of a very unique individual that if you listen to it, I think hopefully you'll see that that's what I'm trying to do, because this is a man that has done a lot, and he's done a lot of work to figure himself out, and he's still on that path, and it's always changing, and he's, I think, a once in a lifetime sort of person that you have in your life, and you know when you meet those people, like, wow, this person's really unique, and they're just off and running doing all this random shit, and you've got to try and slow them down every now and then and be like, what's going on here, and what can we learn from it as well? So if you haven't listened to the Rise and Fall, which was part one, that's the original podcast I did with Simo maybe a couple of years ago, and now the Redemption, so it's kind of an update of what's he up to at the moment, then go and check that out. But at the end of the podcast, he talks about a gym that he's currently involved with, and I don't know, we didn't get to go deep into that, so I don't want to get any of this wrong, but I believe he's helped put it together along with some of his business partners, and he believes that if they can provide better gym facilities or a space for people of South Auckland, that location to go and work and train out of, and give them access, and I think it might be subsidised or even free, I'm not entirely sure, some of the classes and whatnot, then they might be able to uncover the next UFC champion. Now, what a crazy thing to work on. What a unbelievable thing to be really passionate about. And they had their big open the other day. I couldn't make it down, but I saw some of the social content, and it is fucking impressive. So if you are down that way, I'd suggest checking it out. I'm pretty sure it's called, what do they term it? Let me just get you the Magnitude Performance Center, I believe, maybe what it's called. There was the open for that. But if you search for Magnitude Performance Institute, that's the terminology, you'll find it on Instagram. But it's in Mangere in Auckland, and it's a hell of a spot. Like, Simon thinks that it is the best gym in the country. And, I mean, he's going to be biased, but, yeah, he's a passionate man, and he does a lot of stuff. And it's bloody good to see him. We need more people like that in the country, I believe. Now, the other thing is, somebody left a comment on Instagram before that I just wanted to touch on, and I thought it was really interesting because it was a person who, they said to me recently that they haven't thought about their retirement. Remember, for my generation, there was no podcast, no helpful websites, etc., and in our 20s and 30s, no KiwiSaver. We saw firsthand while at high school the impact of the 87 stock market crash. Our parents didn't discuss money, it was bad manners. I kind of remember those times when it was like bad manners to talk about money and to like ask someone how much they make and stuff. I sort of forgotten that. Sometimes I go to lunches and I ask people how much they make, and I'm like, fuck, it was like offensive back in the day. Anyway, thank goodness for the accessible education now available. Amen. Personally, I'm ensuring my kids are getting into thinking and acting toward their retirement early. LOL, they will have to, because mum and dad aren't leaving a massive inheritance. But then there was a comment on that, and it says, this is exactly why poverty spans generations. There was no access to information or easy access to education. Things have changed so much in the past 20 years, but the goalposts have moved considerably too. Just remember, it doesn't diminish your success to acknowledge the struggles of others. Great podcast, by the way. Now, I hear what that person's saying, and I get it, and I'm sure you can all relate to it too. However, this is a good example of how we have to be like so careful what we believe and then what we continue to believe. Now, for some reference, like, the stock market has been around since the 1700s, okay? And if we go around saying, like, we didn't have that education, because I hear baby boomers talk like this, or older people, and I go, okay, did you have libraries? Oh, well, that's different. It's not as accessible. Yeah, but remember, Like, things are always evolving. Now we have too much information, and also we have heaps of information and people can't apply it because they're oversaturated with it. So I'm not saying that this is wrong, but it led me to think, oh, I wonder, because I kind of thought about it and I'm like, yeah, but, you know, we had, like, I used to go to the library and work out of the library when I couldn't afford an office space and when I didn't have a place to base myself, and so I would use the library for that. And like there's always room in them. Well, most of the time. They're everywhere around Auckland. If you live in the 09, most towns seem to have a library. I've worked out of the Dannevirke Library, the Palmerston one as an example. When you're bouncing around the country having meetings and shit and got nowhere to go, they're a fantastic fucking office when you can't afford rent, nor office rent, nor rent to actually live. And like when you're starting a hustle from the ground up or something, like sometimes you got to do what you got to do. Anyway, the resources in those places are amazing. And I kind of started thinking, well, like I wonder how those came to be. So I did a very quick Google search on my way back from the gym. And basically, the pre-1840s, missionary and private libraries, early European missionaries and settlers brought books to New Zealand in the 1840s. Some churches and schools. And what about schools? Like schools have libraries. I can picture the library at my primary school. 1840s, Mechanics Institute and subscription libraries. So it goes through the different types of libraries, and then 1860s public libraries began to emerge. Local councils began to support free public libraries. This could be one of the best things that the fucking councils have done. The Dunedin Public Library, established 1869, was one of the first free public libraries in New Zealand. So Dunedin should be the wealthiest place in the world because they were the first to get access to this free knowledge. So is it, you Dunedin listeners? Huh? Are you? Anyway, you know where I'm going with that. So 1900s, expansion and government support. And then check this shit out. The Carnegie Foundation, backed by American philanthropist Andrew Carnegie. Some of you will know who Andrew Carnegie is. He was once, I think, the richest person in the world. Funded several NZ libraries in the early 20th century. I didn't even know that. I'm blown away. The 1930s saw an increase in government funding for libraries. So Andrew Carnegie, for a quick Google, he became a leading philanthropist in the United States. Actually, sorry, just to go before that, because some of you won't know who he is. He led the expansion of the American steel industry in the late 19th century and became one of the richest Americans in history. Now, he became a leading philanthropist. During the last 18 years of his life, he gave away around $350 million. That's the equivalent to $10.5 billion in 2023. Almost 90% of his fortune to charities, foundations, and universities. That is crazy. His 1889 article proclaiming the gospel of wealth called on the rich to use their wealth to improve society, express support for progressive taxation and an estate tax, and stimulated a wave of philanthropy. Crazy. Imagine doing that much in your lifetime, where you donate $10.5 billion. But all of us, because I know some people are like, oh yeah, but he did this, or he probably ripped people off and steal or something. Fuck, brain think wrong. Brain think wrong again. Your brain need to go to, what am I doing? What could I be doing? What's the little thing that I could do for somebody else? If we have more of that, then I think we have a greater country. And maybe that's what growth needs to be for all of us from the top down is, okay, what can we be doing to improve other people's lives? Just a little bit, every single day. But anyway, you can now see like how much I get to learn through doing Keep the Change myself because of the things that people say and the people I bump into and what it then gets me thinking about. And then I have to go away and research it to be like, and when did we get libraries? And then I end up down these little rabbit holes, and I have to be careful not to go too far down because otherwise we turn into a 10-minute introduction for the 250th Money Mail, and we haven't even started. So anyway, it is week number 250. I should just round that out because I'm not shitting on that person that, you know, I'm not dismissing the fact that poverty can't span generations. What we need to be aware of is it doesn't need to. It does not need to. So we've had libraries, we've had free libraries, we've had donations from the world's richest person to get libraries going in New Zealand. We've then had the internet, we've had TV before that, we've had radio. But most people haven't gone for education, they've gone for entertainment. And that's how we keep generational poverty and shit going and we don't break a cycle. So all of us, when we're out here trying to learn to do things a little bit differently, to have a better life, to better the lives of ourselves or our parents or even our children or whatever, maybe the children's children, awesome. Circuit breaker. Brilliant. Don't forget to pass on the knowledge that you have inside of you and that you're picking up and that's making your life better. Encourage others to make their life better too, and put some of that education in front of them. Some of them aren't going to be too interested, but I believe that we're all got the ability to learn things and change who we are and our environment and our lives and our futures by implementing some of this stuff. Not just keep the change, just anything. But if we don't believe, like if we always look back and go, I didn't have that, then, you know, we're always going to think like that and things aren't going to change. And then a future generation will be like, we didn't have AI. You know, we didn't have 5G internet. We only had the dial-up. I would know everything about investing and building wealth and improving my life if only I had the 4G, the 5G, the 6G, the 7G, and the AI. But, you know, I didn't have it. I only had the dial-up. We only had the dial-up at our house. We've got to apply. First, we've got to get our brains to look for it, be willing to take the education on board, and then do shit with the education. Otherwise, things don't really change. And we look back and go, what happened, man? Nothing happened. Life just passed you by. There's a great saying, and I can't remember it, and I need to dig it out because I feel like it's something that I'll explain it. It's something about, like, if you stop learning, then you basically, well, the people who continue to learn are well equipped, and those who don't learn end up equipped for a world that doesn't exist anymore. And so it's just like this, what this person says is things have changed so much in the past 20 years, but the goalposts have moved considerably too. Exactly. Because it's always changing. The world's always changing. And if we don't continue to educate ourselves and stay present with it, then our education leaves us equipped for a world that doesn't exist anymore. Does that make sense? And now the person articulates in a way better quote, and I'll find it for you and I'll bring it out in a future Money Mail. It's something about learn it or something. I'm like, fuck, did they misspell that word? But I think it actually is a word. Anyway, we've got to keep learning. And that's why you've got Charlie Mungers of the world, etc. Like, you've got to keep your learning going. Because the world's always changing, and otherwise we get trapped in this kind of, you're not equipped for the world that we're in. And I think we've seen this, and we'll talk about this through this podcast, but we've seen this where recently I saw someone in construction complaining about the construction industry, and I'm kind of thinking, how are you just figuring this out in February 2025 when this economic downturn has been happening for a couple of years? And then I go onto their Instagram to have a look. The last post was something like anti-government and COVID-wise in 2020. I'm thinking, if you had the right education and the right mindset, you would have been posting about your construction business on your Instagram every month, maybe even every week, maybe even, twice a month or something about the jobs and stuff that you were doing to generate some activity so that you're not in the position where you're now saying the construction industry is cooked and fuck New Zealand. But no, you've got the tools, education, Instagram, and you've left it there, and then you want to have the right to run a business in New Zealand. One of the hardest things to do, but also the easiest if you can navigate it. So don't take it that I'm saying it's like, of course it's hard. Everything's hard, but you can break the back of it. Now, but instead of using an amazing tool like Instagram to drum up some business and shit, you haven't posted for 5 years now. But the last post was about complaining about COVID and taking the piss out of the government or something, and the 5-year window's gone and you haven't used an amazing resource sitting in front of you that could have generated more work, and now you're saying I'm having to let staff go, the construction industry's poked, and the country's fucked. And that's how you're waking up and starting your day. Jesus. Like, when I see that, I can't unsee that anymore. And it's becoming harder for me to have sympathy or empathy, whichever one, for people like that. When I'm like, what have you been learning? What have you been doing? Like, we've been in the trenches, man. Come on. Like, what the fuck? You don't want to be living and thinking like this. We got to get going. You got these amazing resources, but you're not using them. Come on, let's apply them. But anyway, another good example. If we're not applying and using the tools that are with us, we end up equipped. Like, this person's deep in the recession now. And it's like, we're thinking, this has been going for a while, man. What the hell? Like, what have you been doing? My brain goes like, what are you doing for marketing? Where's your website? Let's have a look at it all. Let's have a look at your Instagram. Nothing. Well, are we then surprised that that they're not equipped for the world that we're now in? No. Because they haven't kept their learning going. Oh, right. Week 250. We're off on a bloody tear here, aren't we? Thank you to all of you, the readers and listeners, old and new, especially those that have gone through the whole back catalogue and the people who have been on the whole journey. It is amazing to think how much of this content that you would have soaked up, and it's been incredible recently, the reach that Keep the Change has had. and the amount of people that have stopped to say hello or thank you. So I do really appreciate that. I'm just going to take a deep breath. I was just really tearing into it for 15 minutes. And I did actually just go to the gym prior to this too, and I said I shouldn't record podcasts after going to the gym because it's like doing a workout when you stand up and record a podcast. Seriously gets through some calories. And I had one of these clean energy drinks as well. My word, that might explain that first 15 minutes. I think there's 110 milligrams of caffeine in that shit. I had to look at the can. I'm like, is this an RTD? Am I about to get on the piss at like 7:50 a.m. in the morning? And I legit checked the can, but it doesn't say there's any alcohol in it. But whoever made those clean energy drinks, yeah, that's a hell of a can of stuff. That got the peach flavour, not sponsored of course, but shout out to anyone that works there, and enjoyable. It's basically apparently it's natural caffeine with a hint of flavour. Anyway, crazy to see what's happening to the drink space in this day and age. Let's keep rolling. So back in 2021, which was Money Mail 83, we started talking about pay cuts for New Zealanders because interest rates were about to rise and impact a number of people. So when I started trying to think, okay, how do we educate people about how the OCR works? Earlier on, like 2020, we were talking about interest rates decreasing, and I thought, well, as interest rates started to increase, let's look at it as like a pay cut for the old household. So we started talking about it as a pay cut. Now, Kiwis are always keen on locking in the best interest rate and having the will they go up or down yarn with people. And fair enough, because it has a big impact on a household budget. Now, at the time, in 2021, many mortgages were either floating or fixed, or due to roll over in the next year to be fixed. So those loans soon needed to be refixed at a new, higher interest rate compared to last time they were fixed. This meant a pay cut for a household budget because they were now going to be paying a higher interest cost. Now, hopefully that all makes sense to you now, given where we're at in this OCR cycle. But a lot of people were learning for the first time about interest rates rising, and all of a sudden they were going to have to pay more for their mortgage. And as one person put it, what the hell? I'm going to have to pay more, but I don't get anything extra. Yeah, welcome to the game, baby. Welcome to how an economy works. It sucks, eh? And I think it was a big wake-up call for a lot of people. They took big pay cuts into their household because they were having to pay a higher rate of interest. So people have had some serious lessons over the last few years. But now we're into the reverse. The pay rises have begun for some. In 2025, over $200 billion worth of mortgages are either on floating or short-term fixed rates, which are up for a refix in the first half of this year. And we're already at the back end of February. So the Reserve Bank figures show that a total of around $370 billion of outstanding mortgages. Around 55% of these mortgages can be refixed before the end of June 2025. So that's going to mean lower interest rates and more money left in the pocket for those mortgage holders, which are now going to be fixing or rolling onto a rate that is cheaper than what they're currently paying. So what will they do with this money? Well, lower interest rates ease financial pressure on households, they increase disposable income, and they stimulate economic activity. Of course, spare a thought for those who will have lower term deposit rates and savings rates. And I saw like a bank had a savings rate for teenagers of like 1.15% yesterday. Seriously? If we needed any more encouragement to teach kids how to invest rather than put money into a savings account at 1.15% to then be taxed on the interest income as well. Like, fuck, thank God for some of these investment platforms that have now made it easier for all of us to learn how to invest and to deploy cash. Even my business partner was like, it's funny because I wouldn't even teach my kids how to put money on a term deposit anymore. But that is a big change because for a lot of people that has been like the tried and true way to save and invest. And often when we talk about examples of compounding at a 10% return, a lot of Kiwi people will say, where can you get 10% returns? Because they're comparing it to term deposit rates because that's all that they've learnt about. So going back to that person's comment that we were talking about earlier, you know, things have changed so much in the past 20 years, but the goalposts have moved considerably too. Like if you just learnt about term deposits, your life's going to be very different than learning about investing. And this is what happened based on what the comment was saying from the first person, where they're saying that we saw firsthand while at high school the impact of the 87 stock market crash. It turned a lot of people away from investing. And we missed the boat massively as a nation. And now we're all deep into property. And I think property is worth about 1.6 trillion in the country or something like that. Maybe it's 1.16. But yeah, But like the total market cap of Bitcoin will be just Bitcoin alone, which people think is a Ponzi, is worth more than all the properties in New Zealand, which is pretty crazy when you think about it like that. But then you got someone like Warren Buffett who lived through the 87 crash and whatnot. Like, how did he become that guy? How did he continue to invest? Why didn't he pull back and go, no. So he obviously had the right level of education and consistency and time frame and thought, well, you just got to keep going. But for a lot of Kiwi people, they pulled away. No, let's stick to property and term deposits. And they became favoured types of investments in this country. And now we're seeing the impact of it because the baby boomers have a lot of the wealth and younger people are sitting there going, well, how do I get into the market? And that seems unaffordable. Why are these priced so high beyond their true utility, which is just somewhere to live and to shelter? But why are they an investment? So you now have all these questions being raised about it, and admittedly they've been raised for some time, but there's no incentive to change that because our wealth is tied up in that. And how are you going to change that when so much of people's belief and retirement saving and thinking and whatnot is in property? Then you're going to have a really tough job to do that. But now, as young people come through and start to ask more questions and look at different ways and look at investing and whatnot, then there are more questions being asked. So just because it was like that in the past doesn't mean that it'll be like that in the future. And it will be very interesting to watch the wealth of the country change. And we're going to talk about wealth changing hands in the coming up weeks as well. But anyway, the point there as well is that yes, people are having to pay less due to their mortgage interest rate decreasing, but some people are going to learn less interest, and that's probably going to be those baby boomers, etc. as well, because their term deposit rates are going to roll off and be lower. What are they going to do with that cash? Are they going to redeploy it? Are they going to invest it? Are they going to spend it? My hunch is after getting used to a 6% term deposit rate, when it starts coming back into those 4s, those 3s, it's not as meaningful. They might even be more inclined to just have it sitting around instead of tied up in a term deposit where they can't touch. And if it's sitting around, you know what happens when money sits around, doesn't it? It ends up in your pocket, okay? Because what normally happens when money sits around for you is it ends up in the pockets of the big corporations and the businesses that market shit to you, and you go, I'll give it to them. But we've got a great opportunity coming up over the next few years as interest rates decrease, where baby boomers are going to take money out of term deposits, and then they're going to go, what do I do? And the longer it takes them to figure out what they do with it, there's a higher chance that you can take some off of them. And I know some of you are like, oh, don't use that language, but this is just trying to keep it simple and fun. Go and help them. Provide services to them. Solve problems for them. Make their lives more convenient. They don't want to take it with them. Baby boomers say that. I can't take it with you. So go and take some off of them by providing value to their lives that they will pay you for. Otherwise, they're going to stack it in the bank and get that 2.5% term deposit rate. I think it's going to be hard for them to do that because we're always chasing more, right? Just as people are trying to fix for the best interest rate, when you've got used to a 6 and all of a sudden now the bank's saying, oh, well, you can fix when you term deposit for the next 6 months at 2.8%. Really? Oh, it was over double that recently. Oh, I'll have a think about it. The longer they think about it, the more chance you can be in front of them when they've got cash ready and say, hey, what about this? Would you like to buy this? Would you like me to mow your lawns, etc.? Ah, yeah, it's only $80. Let's go. Hurry up. It's only 80 of the 300,000 that they got sitting in the bank account at the time. I'm just telling you, this is what we're going to go through, and people are going to miss that wave as well. They won't get it. There'll be big news articles in coming years like, oh, the baby boomers are spending heaps of their money because they can't earn as much. And keep the change listeners, we'll be fucking 2 or 3 years ahead again. So trust me, you know yourself. If you have money sitting around, there's a high chance that you can't help yourself and you go and spend it and you do something with it. The baby boomers are going to do the exact same thing. I could be wrong, but I don't think so. I think we're going to see a wave of spending from a lot of those baby boomers because they're going to be into decumulation rather than accumulation. What's the point of having all that cash tied up in a term deposit or at a bank when we could be using it? We could be enjoying it. Let's enjoy it before we go. Let's make our life easier. Those selling convenience and adding value to older people's lives going to be a great way to protect yourself and ensure that you can always earn some money because there's always somebody spending. We better carry on. It's often referenced that an increasing official cash rate has a lag, typically 8 to 18 months. as people are yet to roll off higher interest rates to pay more because they've fixed at a lower rate before interest rates rose. So we saw this in 2021, 2022 as interest rates started to increase. People kind of like, oh, okay, that's what's going on with this official cash rate thing. Then they went to refix their mortgage. Bang! 6% please, 5%. Oh, we're only paying 2.5, 3.5. What do you mean? No, interest rate's 4 point something. You want us to pay 7? Yeah. So there's a lag between interest, the OCR going up and borrowing becoming more expensive, and then when it becomes more expensive for you or for the borrower, right? Because they've normally fixed for a period of time. And when interest rates were low and a lot of people were expecting inflation to start to increase and the world was getting smarter, a lot of people fixed for a lot longer. We're like, I'm just going to protect myself at 3% here, 3.5 for 5 years, let's roll. And I've seen countless people talk about that. And now, you know, they have kind of weathered the storm and got through some of it. For a lot of people, they didn't, especially people buying properties in late 2021, early 2022, etc. So there's always a lag for those people on cheaper rates to then end up on the higher rate. So that's why they talk about a lag with the official cash rate. But this is a little bit different as we come down the other side, because there was so much warning that interest rates would fall. Kiwis have been getting themselves ready. Let's not forget that the official cash rate sat at 5.5%, capped out, from mid-2023 to mid-2024. All through that, it was kind of like, we're at the top. We're at the top. So we've been priming people since mid-2023 that interest rates were going to come down. Now this week, the official cash rate decreased again by 0.5% as Adrian Orr stuck to his word from last year. We probably have to start calling him Sir Adrian Orr because he'll get a knighthood for the amount of engineering he's done. He said he was going to engineer a recession, and my word, he's probably engineered the best one that the country's seen. So Sir Adrian Orr, he stuck to his word and kept the OCR coming down and decreased it by 0.5%. Now, it is expected as well that the official cash rate will reduce further and allegedly be around 3% by the end of the year. You're seeing banks offer lower mortgage rates and people have the expectation that these will decrease further. And again, people started expecting a decrease in the official cash rate from mid-2023. Now, many borrowers have anticipated lower interest rates and therefore opted for shorter mortgage terms over the past 2 years. So to step that out for some of you who may be new around here, people were being told that interest rates were going to decrease, the official cash rate was going to come down. They'd learned that, okay, that means my interest cost is going to be cheaper, therefore I shouldn't fix my loan for too long. Let's fix it for a shorter term and pay the piper, and then we can keep rolling off as the interest rates decrease. So there's a lot of debt that is going to be rolling off onto a cheaper rate. Now, there's 55% of household debt rolling off onto a cheaper rate before 30th of June. Now, there's another decrease in, there's another decrease. There's another OCR announcement in May, I believe. Maybe even sooner than that. I'll check that. But that could see the Reserve Bank decrease the official cash rate again, and I think they're expected to by maybe 0.25. I think there's one in April and then maybe one in May. So there's a lot of people that are going to be refixing or having their rate roll down onto a lower interest rate due to being floating at the moment. So when they're floating, it means that you're basically just paying the day-to-day rate and you haven't got it locked in for a term, and at the end of that term then you pick a new time frame and a new interest rate based on what the market is selling debt for at that time. So with rates falling, the financial relief is going to reach households faster because there is so much rolling off onto a cheaper rate. Now, this is why a lot of people are saying, it's going to be a year of two halves, where it's still going to be tricky in this first half, but by the time we get into July through to December, you're going to have people, the majority of people are going to be on lower interest rates, and the average interest rate across all debt is going to be decreasing and quite steadily, and that's going to mean more money left in household budgets. Hooray! Businesses will love to hear this because they know deep down that when Kiwis have money in their pocket, they do one thing: spend it. Exactly what we're talking about before with the baby boomers. So businesses know this. When people have access to cash, they try and take it from them. And people willingly do it. 40% off this weekend. You could just about tell what company that is. Don't miss out. 40% off. Actually, that sounds like a fucking auctioneer from Ray White. what I think I was trying to do the Briscoes. I don't know if I'm very good at that. I'll give it another go. This weekend only. No, I'm not very good at that. Okay, I thought I was, but I apologise. Anyway, as there's more money in the pocket for the individual, the business is going to shake it out of people. Well, someone's going to shake it out of you. And your sharesies, your Generate, etc., like they're competing with that, as we often talk about. We're trying to encourage people to invest and not to consume and go, right, let's put it aside and save it for the future so we can spend it in the future. People are like, no, 40% off this weekend. One weekend only at Briscoes. Maybe that's Harvey Norman. I don't know. But everybody's competing for the dollar, and there's going to be more of it, and Kiwis won't be able to help themselves. They'll spend it. But not you. You'll think before you just go and spend it, okay? Because you're smart. Now, it's been a challenging couple of years for businesses, so of course they're going to like this news of households having more cash. Whether you're a business owner or an employee, you've felt the slowdown. The economy has been in a recession, effectively, per capita, for 2 years. It's a long time to be in a recession per capita. Basically means if we weren't importing more people into New Zealand, to use that terminology, which is then sort of growing the GDP, that per person, the size of the economy is getting smaller. So there's less to go around per head. Now, the unemployment rate's also risen to 5.1% in the December quarter, and I still think there's a bit of pain to come, but the Reserve Bank predictions are that it starts to decrease, but it still stays above like the 4% rate right through to 2028 from the data I was looking at yesterday. So you should, what's the word? Like, you should always have your finger on the pulse, or stay on your toes. Nick Kyrgios. You know what I'm talking about? That podcast? You want to stay on your bloody toes, man, because, yeah, like, apologies to those who are out of work at the moment, but unemployment is like a real threat all the time. You never know what's happening underneath the business that you're working for. And you could be made redundant or lose your job, or the business could go under, and it could be a massive surprise to you. So you got to, you know, I say this and it's kind of in your face, but you should never really rely on your employer or the government, because things can change for both of them. And at the end of the day, they're going to do what's best for them. And if you end up in a world of like, holy fuck, how did this happen to me? Then it's a hard thing to get out of. So please, you know, be prepared, because as an example, two examples for a government can change, right? And the rules can change, and they cannot keep their promises. So we all know that, but that's easy. So we kind of get the, like, don't rely on the government. We have like a really strong these days, a sort of belief that the employer is always there for me, and, you know, I've got all these rights, and they should be doing this, and I could get a PG if I left as well, and like all this stuff, right? But at the end of the day, that business could be failing, and you don't even know underneath. And the IRD might come along and go, that's enough. Creditors could, or the banks. Hey, you're not paying your loans, you're not paying your bills, you're not paying your GST, you can't keep trading, we're winding you up. You're an employee of that business. You had no idea that that was going on. Bang. You don't have a job. Your employer doesn't want that to happen. Like, they won't be sleeping at night. They'll be freaking out. I've had one of those calls this week. I could tell the way that person was speaking. I'm fucking worried about the way they are talking. And I'm like, I'll find you somebody to help you. You need to hang in there, be positive, etc. We're having like one of those chats, because I can tell by the tone of their voice, and I can tell it's taken time for them to reach out. But you have no idea what's happening underneath the surface of a business, because the world markets to you that everything's just rosy and business owners step on everybody and like all this sort of bullshit that you kind of hear with the big corporates, and it gets tarnished to the SME world and whatnot. A lot of you may be employed by an SME or a business that you don't know. They might just be one phone call away from the investor that's funded it for ages going, nah, things have changed for us. We can't put any more money in this time. Boom. Business is straight into panic mode. Whoa, what are we going to do? Who's going to pay? Wait, what the? And if you're an employee, like, you don't have to think about that stuff, but this is what I get to see all the time. Now, also, secondly, there's a lot of aging business owners in this country, and their business, much like people look at their property as their asset to help them through retirement, their business could be their retirement plan. And there are a lot of people with a lot of money, and that are going, I want to buy that business. And we're going to see a big, big, big wave of that. We're going to see international companies coming over here going, is that business only worth 8 million? Fuck yeah. I'll have 6 of those, please. Thank you. Oh, we'll just centralize all of the admin of all of those businesses. We'll centralize the finance function. Oh, You know, we don't need finance from those businesses because we can inject our own money into it. Boom. Employees, not needed. You're going to have to find somewhere else. How could this happen to me? It can happen to you, is what I'm trying to tell you. So just don't take this moment in time of like, oh, we're at high unemployment, it'll come back down. Please, why do you think I'm always banging on about you need to understand some skills? Like you need to get back in control of your own income and things like that. Because yes, it's good when employment's going well and when things are going well for us, but you've got to be able to adapt when something can change. Because it's always an outlier that changes your life, that you kind of hadn't really thought it's going to be that. But you want to try and de-risk it to the point where you go, okay, it's happened to me, but I've got myself sweet and now we can keep rolling. So I promise you we're going to see more of that. And again, just have a bit of smart about you if you're kind of in that cocky, oh, I'm an untouchable employee, okay? Because that's the biggest fall when it's you, you know, when you're in that mindset and it couldn't happen to me and you think you've de-risked it all and then bang, international company buys it out, whatever, superstar moves here, they're going to have your job. How could this happen? It can happen, again, is what I'm trying to say. So don't be too cute. Stay on your toes. Nick Kyrgios, or Kyrgios to some of you apparently. Stay on your bloody toes. Anyway, unemployment 5.1% at the moment. That's the highest it's been since September 2020 during the COVID lockdowns. I went to the Stats NZ website. This is the geeky shit I do for you people. And prior to that, it hadn't been that high since December 2016, according to the Stats NZ website. Now, most of our business clients at the moment, they're doing pretty well. Like, there's some pain, but a lot of them are just going about their business and they're ripping through it. And a lot of them were able to pay their provisional tax on the 15th of January too. And that's always a tough one to pay because there's a lot of expenses at that time. Revenues are decreasing. There's a lot of cash going out, GST, PAYE, Prov tax, annual leave, etc. If you're not planning well, that can be a very tough time of business for New Zealanders. I've emailed the IRD this week to ask them for the data around the overdue tax arrears from all taxpayers in New Zealand. And I'm just going to quickly Google that. They have not updated that. So the last data is June 2024. We should have September data by now, and we should have December data. So I'm on their case about that because I know that that's going to have skyrocketed, but I can't see the data to talk about it, but once it's there, I will tell you more about that too. But that's people not being able to pay their taxes, individuals and companies. And I do think that there will be some people who wouldn't have been able to pay tax at 15th of January just simply because they wouldn't have had access to the cash. But most of our clients at Next Advisory, they were able to pay it, which is good. And not too many of them were getting in touch about tight cash flow, but they sort of were a year ago. It was sort of, oh, I don't know if we're going to be able to pay these creditors. Oh, overdrafts, how do they work? Oh, what's it go of, tax if you can't pay it? So this is a very different sign to last year, and a sign for me that things are kind of moving in the right direction. Now, don't get me wrong, there's still plenty of pain out there, and there's issues bubbling away under the surface for some business owners, but there's some good signs as well. But for all of us, there will always be challenges, outliers, and new risks, as we touched on before with employees as an example. But Kiwi households should soon have more disposable cash in their pocket. Sure, some of that will get chewed up by clearing past debt, the increase in the cost of living, which has just become more expensive, and yes, inflation is trending down, but it doesn't mean things have got cheaper. It just means that they're not getting more expensive faster. So some households are still going to end up with an excess. Yep, some people will already have allocated what they're going to do with their pay cut from their interest rate decreasing, but some households will have that excess. And if that's you, I'd suggest being deliberate now with your intention around what you're going to do with it. What will you do with the pay rise? Some ideas to get you thinking. Maintain current repayments and even ask about reducing your loan term. So someone said to me the other day, I didn't realize, I thought all loans were 30 years. And that's just how it was. No, you can pay them off faster if that's what you would like to do. So some people are going to maintain their current repayments and then clear the debt faster. So speak to your mortgage advisor or bank about that, and you might turn it into, someone said the other day, our 30-year loan's now going to be 17 years if they keep up with those repayments. So then they're saving themselves 13 years of paying the bank. What are they going to do in that 13 years? Probably start investing, growing, might retire earlier. You just don't know. So when you unlock some of these little things and you stay disciplined with your consistent actions, then new worlds open up. It's just like me, not new worlds, the supermarkets that is, keep going to Countdown, great spot. Used to work at the Woolies distribution centre there. Shout out to all those distribution centre workers keeping us fed all around the country. Outstanding. Anyway, Absolutely just lost my train of thought there. I need to get off this. We're 40 minutes in here. I've got heaps on, don't I? That bloody clean caffeine drink I had. My word. Paying your loan off faster. Oh, yeah. Like 250 episodes of this, right? By staying consistent with that, the opportunities that I now have from doing that are way bigger than what I thought they were going to be, back at doing it in episode 1 or even like 81, 83, 103. Like I could see it coming and I knew that big things would happen, but I didn't really know what they were, but I knew if I stay consistent, opportunities will come. So we're just going to stay consistent and see what else pops up for us. So it's the same thing when you're trying to stay consistent with your loan repayment, then in future years, you're going to have more equity, you're going to have more opportunity, you might, and you get to figure those things out as you go. You don't have to have it all figured out now, but if you're going on the right path, then it becomes easier to figure out when you start getting closer because the opportunities, you can have a crack at the opportunities. But previously, like you wouldn't have been able to. You're like, that's not an opportunity for me. It's much like the story I always tell about, should I be investing in Xero shares? Of course I should. I could see what was happening in my industry. Could I invest in Xero shares? No, because I'd allocated all my resources to dumb credit card debt, and so I had to pay that back instead. What a massive missed opportunity. But I'm not in the arena to have the opportunity because I haven't been taking good, consistent actions to start with. Maybe for some of you could look at building an emergency fund so that you de-risk the fear that maybe, you do lose your job or you don't have income coming in, you've got expenses going out. Maybe for others of you, it's reviewing insurances that you previously ignored or you saw as unaffordable. Because this is what I've seen with a couple of our insurance clients where they're saying, yeah, people are getting back in touch where they were running the risk not having insurance over the last year or two because they simply couldn't afford it. And now people with a bit more money in their pocket are like, fuck, we don't want to run the risk with no insurance, let's roll. So different types of insurance. So if you're listening and you're in the insurance space or any business, when the economy changes this much, you should go back and chase up all your old leads because their circumstances will have dramatically changed from a year, 18 months, 2 years ago. So there's a free tip for all you business owners out there. Go and chase up the work you quoted, the leads you had, the conversations you had over the last 2 years, and I bet that you'll drop some work out of the bottom, and that will be great, and you'll be very thankful, and you'll go to the Next Advisory Google search and leave a 5-star review for how the advice can change your life, and that's what we're here for. Reduce high interest debt that you've ticked up. Maybe you've ticked up some debt over that time that you deep down shouldn't have had. Like, look, for his credit card, Gem Visa, etc., the buy now, pay laters. I didn't have that. But if you had that sort of shit, now you'd be like, oh, no, it doesn't have any interest. Okay. What else you got? Personal loan, car loan, whatever that you've had to borrow that's got a higher interest rate, second-tier lending, etc. Maybe with your buffer, with your decreasing interest rates, you're trying to clear through that debt faster. For some of you, it might be looking at investing. Okay, maybe let's start investing the difference. The bank don't get it anymore. Let's invest it. Let's learn about investing and let's go. The excuse would have been like, oh, we don't have any money to invest. Well, now you might. So now what's your excuse? Come on, we've got to take some fucking action around here. We know that. It's no bullshit zone. Refixing shouldn't be a surprise is the key here, right? So if you're refixing over the next year, don't get to them, but oh, shit, like what are we going to do? Run your calcs now. Start thinking about it. This should be part of your forecasting and budgeting. I don't have it on my Money Email budgeting template, but you should probably add it on yours if you've got debt. Like you should know when your debt is rolling over, every tranche of it, because it makes up a big part of your budget because interest rates on debt changing will impact your cash flow. And that's what we're looking at when we're doing month end. We're looking at money coming in, money going out. Now, if in the next month or 2 months your interest rate is going to change, then invariably the difference in cash will, needs to show up. So you're going to either have more or less based on what's happening with that interest rate, or maybe you're just going to keep the payment the same, but then you want to make sure that you're still tracking that your debt is decreasing faster and probably track the time at which it's going to take you to repay that debt too, to get excited about that. Because it can be very boring just paying a loan repayment, but it can be exciting for us to see that the time is decreasing for us to then own the asset that we borrowed the money for to start with. So a couple of little things there to add into your month then that might help you if you do have debt. Anyway, we better get out of here. Did you know net migration in 2024 was 27,100? So our population actually grew. Now, in 2023, this was a record net gain of 128,300. That's crazy. Basically, 100,000 less people moved to New Zealand in total. Now, of course, we have citizens leaving, we have citizens coming home, and then we have people moving to New Zealand. All those figures get added together to show like what's the net migration into the country. So the population is still growing, but we're losing Kiwi citizens and bringing in non-Kiwi citizens. And we've learned about that from Professor Paul Spoonley as well. So that shouldn't be a surprise to you, but it's crazy how much that has decreased. We're about to go past 1.7 million audio downloads to the podcast. Shout out to all of you. There's 12,650 email recipients. We've got about 55,200 followers on Instagram at the moment. We reached 130,000 people on YouTube in the last 90 days. There's 8,300 people subscribing to the content on LinkedIn. The snowball is rolling, and we're going to keep it rolling as week 250 comes to a close. See you next week. Be good out there. Be very good. And be good at what you do as well. Great way to get ahead. Just be fucking good at it.